And what we are doing here on this channel is that we are doing technical analysis. So what is that? This is the analysis of the tug of war between the buyers and sellers. The tug of war between the buyers and sellers. And we are focusing on that. If we focus on news, if we focus on the fundamentals of a company, we are not looking at the complete picture, because a company might be doing super great, have had a great quarter, but the stock can tank, even though they had a great quarter. Why can it tank, even if it had a great quarter? There are many reasons for that. Maybe some institutions that were large investors in the company decided to just get out for whatever reasons. Maybe they want to rearrange their portfolio into some other company. So this can happen. This can happen. They can sell on the top when everything is doing great and you think that it is going to continue because the company had a great quarter, and they just decide to, no, we are going to sell and go into something else. This can happen, and this can influence the stock. Also, we have future projects. Maybe the company had a great quarter, but is announcing that in terms of future projects, there are not many of them. There are some concerns in the market that the company can reinvent itself. There are thousands of reasons why a company can go down, even though they had a great quarter. And we have a lot of examples. And Tesla is a great example. Tesla is a really great example for that. If we look at this chart of Tesla, this is a daily chart of Tesla, and Tesla made an all-time high November 5th, 2021. Since then, it has been going down. Tesla has been going down since November of 2021. Yes, there has been some moves up in there, but overall, this has been going down. So the stock was at $400 in November, and now we are at 168. And Tesla had some great quarters. Look at this one. January 26, 2022. 7% earnings surprise, 3% revenue surprise. What did happen? The stock went down later on. Came back up, came down, further down. Had another great earnings, 51% surprise. I cannot invent this. 51% positive surprise in earnings, 5% positive surprise in revenues. When was that? April 20th, 2022. And this is where Tesla was at that point. 50% surprise. So people would have thought, I guess this is going higher. No, the stock went from $330 to $207. And then we had another great quarter. 25% surprise. This is fantastic. 25% surprise. This is going up. It was at $245. It went up to $313. And then went as low as $100. So you see the pattern here? You see the pattern? We see the pattern. So we cannot rely only on those earnings call to predict if a stock is going to go up or down. So what we do is that instead of looking at the reasons why a stock might move, a good news, an institution that is investing in a stock, name it, we are not looking on this channel at the reasons why a stock might move. We are looking at the movement of the stock. So the movement of the stock is the ultimate fact, because it is showing us what buyers and sellers are willing to negotiate as the stock price. That's it. What are they willing to negotiate? And that negotiation is not moves. It moves up, it moves down, it moves up, it moves down. And we are analyzing these trends because it always moves up and down. But sometimes it moves up and down like this. And sometimes it moves up and down like this. And sometimes it moves up and down like this. So this is what we are analyzing with our lines. And our lines demonstrate how low sellers are willing to sell and how high the buyers are willing to buy. And you cannot argue with that. You cannot argue with that because this is the most scientific thing you can think of, because it's based on facts. It's based on facts. It's based on prior transactions, and those transactions are public information. This is great. So if you take a look at this part right here, so this is, let's say, from July 21st to September 30th, 2022. So this is like a 3-month period. This is a 3-month period. Within that 3-month period, what did happen? What did happen was the stock price went from 265.32 to 313.13. I did not invent that number. This is actually what happened in the market. Exactly what happened in the market. The price of the stock during that period never went above 313.13. Do you find it odd that the price stopped exactly at that price point? It stopped here. It stopped here. Okay, I'm going to give it to you. This candle stopped at 314.67. It missed by $1.50. Then pretty much right smack on 313.13. Same thing here, just a little bit higher. This one was 313.80 here. So don't you find it odd that this price has been used in the past to delineate the frontier between the buyers and sellers? This is great information. Nobody wanted to pay more than 313.13 during those 3 months. And no sellers wanted to sell lower than 265.32. 265.32, 265.32, 265.32. So we are looking at the tops of the price, the tops and the bottoms of the transactions that happened during a period. And we are looking at them and we are just drawing a line. Okay, 313.13 is a price at which buyers don't want to pay more. Why didn't they want to pay more for Tesla stock? I don't know. And I don't care. I don't know and I don't care. They don't want to pay more than 313.13. This is great information. And the sellers did not want to sell at a lower price than 265.32. So once we have these two numbers, an upper number and a lower number, then if they are horizontally aligned, then we conclude that, okay, this is a congestion zone. The stock goes from one end to the other. So it tends to zigzag between these two prices. It tends to. Sometimes you can tell me it's not really a zigzag. True. So sometimes it goes from one end to the other, and sometimes it does not go down to the bottom and goes back up. Does not go down to the bottom, goes back up. Okay, this time it does not go to the top and goes back down. And this one close to the top, very far from the bottom, then went higher, and you catch my drift. This is not a perfect zigzag, but it respects 313.13 and 265.32. So once we have established an equilibrium, a balance between the buyers and sellers, then we can say if we start going higher than 313.13, this is going to be different. If the stock goes lower than 265.32, then we are going to understand that something has changed. So people that did not want to pay higher than 313.13 or sell lower than 265.32 suddenly decided differently. They decided differently and we don't know why. We don't always know why. Sometimes there is a specific news. FSD is going to be free. Let's say that Tesla would announce that. So then if we were into an equilibrium in Tesla stock and Tesla announces that, most likely it is going to break the upper resistance. This is the resistance at the top, and this is support at the bottom. If we know of such news, that might impact what is happening, but we don't need to know the news. If we know it, it's always nice to feel smart and, oh yeah, Tesla is going up because of this. Yeah, it feels smart to say something like that, but we don't specifically need to know exactly why it's going higher, because we don't know every single buyers of Tesla stock and what are their reasons to buy. And we don't know every single sellers of Tesla stock, and we don't know all of their reasons for selling. But we can see the tug of war play out. And once we notice a pattern between the tug of war is between these two numbers I mentioned. And if there's a change, it goes lower and goes higher. This is a signal for us to, oh, something happened in the market. Something different is happening right now. There's an imbalance right now. And we can decide to join that imbalance. If it's above going higher, then we can buy. If it goes lower, then we can sell or buy a put to follow the crowd, because this is a crowd behavior. We are looking at the crowd. So this is what we are looking on this channel. So we are identifying the patterns, the current patterns between the buyers and sellers. And this prevents us from making a lot of mistakes. It prevents us from making the biggest mistake ever, which is to hold a stock while it's going down. And we rationalize it by saying, it's going to go back up eventually. And that's one of the biggest mistake, I think, because long term, this is what my teacher would tell me. Long term, we're all dead. Yet, while it's nice to invest long term, are you going to be there to reap the benefits? Maybe not. And who knows what is going to happen to the company you are investing in that you really believe in. Maybe the company is going to turn out to have some bad news, bad technology, make a big mistake, and so on. And so when we look at technical analysis, if we see that the tug of war between the buyers and sellers is now led by the sellers, we just take our money out and we wait until it's the buyers that come back into a position of power. So this is preventing us from holding Tesla from $400 to 105 right here. And so we enter when we see an imbalance, between the buyers and sellers. And here are the ones that I called since 2023. We had an imbalance right here, January 23rd. Boom, we had an imbalance, we had a move up. Another imbalance right here, another move up, a big one. This one was big. This one was a little bit smaller. This one was tiny. And here it was super really small. But once the imbalance, however big, stops, we get up. This is a different type of, I would not call it investing, because investing, you don't look at the stock price at the stock chart when you invest that much. You put your money into a company as if you are, because you are an investor, you are investing in the company and you believe in the company and you look for news that are helping you consolidate that belief in the company. And you don't really look at the stock price. It goes up, it goes down. You try not to look at it too much. And if your net worth in that stock goes down by half, you don't really feel good, but you rationalize it. It's going to go back. It's going to come back up. It's going to come back up. This is a rationalization. It's going to come back up. It's going to come back up. And then you watch YouTube channels that tell you what you want to hear, that it's going to go back up eventually. Solving the money problem for a Tesla. This is a rationalizing. He is helping Tesla investors to rationalize buying high and writing it down. So this is a type of rationalization. It's going to go back up. It's going to go back up. Another type, which is very similar, is, oh, the price is so cheap now, I should buy more. So buying more into a stock that's going downward is riskier, in my opinion, than buying low and selling high. If you are buying while a stock is going down, you are buying high. And the trend is that we should be continuing to go down. So you are buying high and writing it down. This is another type of rationalization. Yeah. Oh, this is so cheap now. I'm going to double down and get back in again. So this is hard to write something down. This is the behavior and how investors think. On this channel, I did not call it the daily investor. I called it the daily trader because when we trade, we don't marry the company. We look at the stock and we are looking at the swings. But swings, the word swing has a bad reputation. Oh, this is just catching a swing. Yeah. Swings can last a long time. This is a swing here. September 13, 2022 down to December. So that's a 4-month swing. 4-month swing. So it's not like it's a 1-day swing or a 1-hour swing. So this is 4 months. And then in 2023, this swing right here, it started in January and ended in February. So that's almost a month swing. Not too bad. We don't have to look at the stock market every 5 minutes. So this is a 1-month swing. This other one right here, this is another month and almost 2 months if you think about this other thing here. Yeah, Galaxy Dance. I wait for my chart to tell me when to buy. I know Tesla went up, but my chart said wait. I'm okay with that. Voila. So this is what we are doing on this channel. And this is what I'm sharing with you guys. So I am looking at Tesla stock and many of the stocks that you see here in this watch list. And I am drawing lines that tell us the behavior, the tug of war between the sellers, between the buyers and sellers. So we are identifying where is that tug of war, where is the frontier for that war. And right now, this is where we are at. Tesla closed at 168.29 on Friday. So this is the resistance, decreasing price. This is the support. The same thing as I showed you with the horizontal congestion zone that we call it. But sometimes it's not horizontal, it's diagonal. And this one is going down. This one is going down. And then we identified something new that happened. It was going down. It has been going down since the top here was on March 26th. So it has been going down for 1 full month. Could not. So people were willing to buy Tesla stock at a lower price instead of using the same, where was I here? Instead of using the same upper price, 313.13, this time it was using a lower price. So yeah, nobody wanted to pay more than 183.67 on March 26th of this year. Then April 9th, nobody wanted to pay more than 177. They did not want to go higher, even as high as what they were willing to pay on March 26th. So the price is coming down. People are not willing to pay as much. You know who is doing technical analysis? The used car dealers. They are looking at the price of cars and they are looking at the trends and they are buying and selling, knowing that this is what people are willing to pay now. People are willing to pay, let's say, I don't know, $30,000 US for a Tesla Model S 2016. I'm pulling that out of thin air. So they are looking at what people are willing to pay, and they are buying cars cheaper than that, of course, to sell at that price. So they are doing price analysis. the same thing that we are doing here. We are doing price analysis on the stock. And this is a lot easier because I just open my trading view, which is free, and I select a stock chart, and this is telling me all the prices that people paid in the past. So this is fantastic information. So I can analyze the price here in my house, in my office. This was going to be a walk-in closet, imagine that. But no, I converted it and boom. So I am here watching my screen. I have all the information that I need in order to analyze what the stock is doing. And what we discovered is that, right here, April 25th, Tesla stock broke that downward resistance. You know, we had the point right here, we had the point right here, we had the point right here, we had a line, and it broke it. Oh, people are no longer willing to pay a lower price for Tesla stock now. Something changed. People, I see the behavior of people. I don't know what they think in their heads, but I see their behavior. And if they are willing to pay higher, it's their business. But it's my business to spy on that and maybe do the same. And what did they, we don't need to understand why, but in this case, we might know. We might know, and this is what the analysts on CNBC say. Tesla had a really bad quarter. They had a bad quarter. Yes, it had a bad quarter, a negative surprise of 8% on earnings, a negative surprise in 4% in revenues. Bad quarter. Bad quarter. This is a fact. Bad. But Elon said some things that made people maybe change their mind. He said, we are looking at building a cheaper car, and it won't be the super cheapest car, but we are going to do a cheaper car that is going to be built on our existing factory lines. Oh, and people thought that that was interesting because he does not have to build a new line, a factory line, in order to build that new car. He can build it on the same existing line that he has right now. Oh, so Tesla is going to build a cheaper car. It won't be the cheapest that they can build, but it's going to be a cheaper car than the Model 3 on the same lines. So what is going to happen? He is going to sell maybe a lot of them because it's cheaper. And we are assuming that he can make profit on it too. And in terms of the cost, he won't have to spend the capex to build a new line. So people are expecting greater profits in the future. And also the fact that full self-driving 12.35 is now available and you can pay for it monthly. So people don't have to pay $12,000 or $15,000, depending on where you are. People can buy it monthly. So they are going to get more revenues because of that, we are assuming. So enough people are assuming that things are going to go better in the future. So this is making them want to pay higher for the Tesla stock. That's it, that's all. And we are looking at that. And we see that we have a break of resistance. So a break of downward resistance is one criteria that we want to see before deciding to buy. A second criteria is to have a stochastic above 60, which we have. And then the third criteria, if you want to follow those criteria, the third criterion, I should say, the third criterion is that we want to also break a horizontal resistance, and that horizontal resistance is at 180.38. So we have two out of three criteria for us to decide to buy. You can buy at any point in time. You can buy with zero criteria while it's coming down. But on this channel, we try to minimize our risk by having at least good things happening to the stock. So I mentioned it. Breaking of a downward resistance, which happened 2 days ago. and a break of stochastic over 60. That's another thing. And we are waiting for 180, 38 to have the 3 criteria. Thank you for watching. If you want to become a member, you can click on the join button on my channel. It costs approximately, I think it's 15 bucks, 15 bucks a month for 3 paid Tesla Weekly Live every week, and the 4th one is free for everybody. So that's not a lot of money, and this encourages me to continue. So I hope that you are going to join. Regardless, we are going to talk tomorrow. I'm going to do a video like I do at around 5 o'clock tomorrow at the market close. So I hope to see you there. And I'm going to wish you a great rest of the weekend. We are going to talk tomorrow, and I'm going to tell you à la prochaine.